After an insane sell-off on Friday, the market shook off the news about the new variant and rallied higher today. Is this just a dead cat bounce? Are we going to head lower? We're going to go over some bullish cases and bearish cases. If you're new here to the channel, welcome. My name is Michael Silva. Today's date is 11/29. We use technical analysis and intermarket analysis to get a good idea as to where the stock market might be headed next. So let's just get into today's episode. Hi, welcome back. We're looking at the market dashboard right here, and you can see all the 11 sectors in the S&P 500 were up on the day. What led the way? Technology and consumer discretionary, utilities, defensive name, real estate, kind of defensive here, pushing up there into the leaderboard as well. Interesting. We take a look at the heat map. You can see here what really held the markets up. Well, I mean, there was a lot of stocks that were up, but the big dogs of tech were up, and that's Microsoft, Apple, Nvidia, Google, Facebook. They were all up, and Amazon and Tesla as well, consumer discretionary names. If you just look at the Nasdaq 100, Nasdaq 100 performed the best. You can see why. Bam, 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 bam. A lot of green. You can see here on the market dashboard, up 1.88% for the Nasdaq. Small caps took it on the chin, though. You can see here some of the bigger sectors are healthcare and financials, both where you see a lot of red. So if these aren't in the green, it's very hard to see the overall Russell 2000 really have a green day, especially when there's this much red on the board there. Now, the question really is whether or not today was just a dead cat bounce. I mean, we had a huge sell-off on Friday, and by huge, I mean it was just a very volatile, aggressive type day. I get people to say, oh, there's only 1% down. Yeah, but the volatility that stepped in on Friday was quite significant if you look at the volatility or the volatility of volatility. And you take a look here at the SPX, you can see that big day to the downside, and today we gapped up, rallied up, and then 20 period held as an area of resistance. So we got to see here if we can recapture that. Are we out of the woods yet? No, we're not out of the woods yet. We took past this low. We have a high, we have a low, and a lower low. So we need to start getting back above this previous area, 47.25 to 47. I think this was 47.40, right around there, to really feel like we're out of the woods. And as it stands right now, the PPO's crossed over to bearish. We have wind at our face right now. Volatility is still, the options market's pricing in a large move for the remainder of the week. I believe an additional $77 now is the expected move, but it was around $150 on Friday. So we are still seeing a lot of volatility here. Dow Jones Industrial Average is really just an inside trading day. So although it looks good that everything's up on the day, I mean, this right here pretty much is an inside trading day where we came outside slightly. This was an inside trading day, and the 50-day period moving average still held as a level of resistance. So there's still a lot of work to do, but there are a lot of people celebrating this subtle move. Now, the Nasdaq 100 had the biggest day to the upside, led by tech. You can see gapped up and rallied higher. If we actually zoom in, you can see here it gapped up through the 20-period moving average, back above that, and did hold. So tech continues to be that strong performer. So look at those FANG stocks, right? Facebook, Amazon, Apple, Nvidia, Tesla. Those names have been really holding this marketplace together. If you take a look at the Russell 2000, it gapped up and reversed itself, bid a little bit off the low of the day. A lot of volume came in here as well. And, if you're looking for hedge longs, if you believe the market's going to head higher, this is getting pretty overextended. You just need to be very cautious and tighten up your risk here. Now, if we're going to zoom into some 15-minute time frames, because this is where it gets a little interesting. All right, so it seems good and all that we've had this up day, and it is. But when you take a look at the 15-minute time frame, we're still below the 5-day moving average. And you can see here, look at these like gap ups and rips, and then they completely get reversed. And this has been like, it's like almost like an algo-driven rally to suck people in before heading lower. So we get this big move to the upside, people jump, and then all of a sudden it rips down to the downside. It rallies up and then gets just crushed. And then we have another day where it's like, no, everything's fine, and then we get crushed. And now we're getting, once again, that gap up and just ramp up, and we had a little bit of a sell-off into close. So we're still in a very short-term, I'd say we're short-term downtrend. Medium-term here on this specific chart is neutral. Why do I say that? The purple line is the 5-day moving average on the 15-minute time frame, so it's a 130-period moving average. This is just relatively flat. It looks like spaghetti noodles, so there's undecision taking place right now. There's not a clear trend on this specific chart, but if you look from November 22nd, it has a high, a lower high, a lower high, a lower high, a low, a lower low, and a lower low. So the shorter-term trend is still down. This is not something that you want to just get super excited about, right? It still could potentially come in to fill this gap right here and act as a level of resistance. I know the futures market is getting bid up a little bit right here, so it's going to be an interesting trading week. I don't think the volatility is over, and you can see that here on the chart. The last 4 or 5 trading days or whatever it's been have been quite volatile. Let's look at the DIA. DIA, this is a downtrend in this shorter term period. We're looking at the 15-minute chart, right? We have the 5-day moving average sloping down. It's been holding as a level of resistance. We had that gap down, and we saw a little bit of a rally today, creating that inside trading day. We have the PMO curling itself over. So we'll see here if we can get above that 353. We're going to have to get back above this 5-day moving average and start to hold above it before, a big celebration here takes place for the bulls. Take a look at the Qs. The Qs, once again, were one of the stronger ones. However, look at this move. It's a pretty aggressive move. We gapped and we rallied, and then we kind of just camped around right here. We did close above the 5-day moving average, but this short term, what does it tell us? It tells us that it's quite neutral of a trend to slightly up. And what is interesting here is we had a lot of volume right here take place as far as the volume shelf profile goes. So it came down, and then it did find itself to act as a level of support. We do have one gap below us, so that can now act as a level of support if we start breaking down. So what is good here? Couple of things. Well, first off, we put in a positive divergence on the 15-minute time frame, put in a low, a lower low. We had a low and a higher low, and then we saw that rally up, and we got above this previous high. So this could be, could be considered a little double bottom, which is an undercut, and then we can rally to try to get up to these highs, especially if tech continues to just hold itself together. But once again, sometimes these aggressive moves, they get overextended a little too quickly. So it's something to just be mindful of if you're piling into individual names. IWM. IWM is looking rather weak, right? Short-term trend is down clearly. We saw that on the daily time frame too. 5-day moving average has been holding as resistance very clearly here. You can see acted as support when it broke down. It was resistance once, twice, 3 times, 4 times, tried to get up 5 times, and then we really just made an aggressive move to the downside here. So it has a lot of work to do if you're trying to bottom feed, so you can find yourself, a good risk to reward trade. I can understand that, but you just need to be very mindful of your risk, right? So if it comes back down to 220 and you're like, okay, well, there's previous support there, I'm going to enter in at 220 and some change or whatever. If it does reach down there, cool. And then you can have a stop loss slightly under this just in case we get an undercut rip. Okay, so watch for positive divergences, watch for potential negative divergences on overextended territory. But as it stands right now, yes, it's in bearish context. Now, this is where it gets very interesting. Let's go look at a couple indicators. So first off, the market seems to be pricing in a big move, and the options market already priced in a lot of volatility, all right? But the thing is, it's very hard to be directional bias right now, whether bullish or bearish. And if you're coming up with a conclusion like, no, it's going to be bullish or it's going to be this, look at there is no certainty around that. Unfortunately, you can't be that sure of yourself of what's going to be taking place. And typically, if you're that sure, that means you're really confident. And if you take that confidence into a specific trade, and you're wrong, well, that overconfidence can lead to a complete wipeout. But this is where what I'm trying to say here is, yes, we saw a positive move to the upside, and we've been getting a big sell-off here. These indicators, right? So the NIMO, the Nisey-McClellan oscillator, it's getting overextended to the downside, but we're really at a higher level here. So this, to me, suggests that it's actually a good buying opportunity for individual names to place certain bounces, because this, to me, is setting itself up for one, this is where breakdowns occur, or 2, this is where we get monster rallies. So it's almost like, hey, we're getting a breakdown or a melt up here very soon. And the NAMO, which is Nasdaq McClellan oscillator, this is the New York Stock Exchange McClellan oscillator, this is the Nasdaq McClellan oscillator. This is also in that overextended territory to the downside, which tells me there's going to be a lot of stocks probably ripping. So if big tech can continue to hold up, this to me says, hey, there could be a very strong melt up. But also we're on that, we're on a fine line right now where if the big tech doesn't want to roll up and it does, hit to the downside, we could see ourselves as more aggressive of a move to the downside. All right, so let's look at the BPNDX, and I'll map out some key levels on tomorrow's video because it's month end. So I'll be looking at some monthly charts there. A couple other charts, BPNDX also getting overextended to the downside, which suggests this is typically good entry points for individual names in the S&P 500. Nasdaq 100, BPSPX, also the same thing. It's getting overextended to the downside, but we're sitting around all-time highs. So this is where one, breakdowns can occur, or we're going to get some big, rip and rallies on some various stocks. If we take a look at the Summation Index continues to roll itself over. It's still above zero at this point, but that's not a good sign. You want to see this turning up right now, especially if the market wants to continue pressing higher. And then you have the 9-month, which we're looking to see if we can get that minus 300 reading at the same time we cross down through zero, if you watch my previous video. Now, a couple other indicators not developed by me. This is XLU over SPY. This is the beta rotation strategy from Michael Gayad, which, if you don't know, I believe on Wednesday, I'm going to be actually live on Twitter with him, just talking about, again, I don't quite know exactly. I think we're going to just be talking about kind of just developing an edge and the rise of, retail traders and kind of things to, maybe make you think differently about how the approach to a market. And we're just going to kind of just talk. But yeah, so be on the lookout for that. I think it's 12 o'clock Eastern Standard Time, 9 Pacific Standard Time, 9 till, yeah. But his beta rotation strategy did flip over to zero, above zero, sorry. But it hasn't closed there for the week yet. I'm almost certain that it didn't switch over to risk off. But what this basically means is, one, utilities could be a potential strong performer, which we discussed on a previous episode. And we talked about a couple names, actually. For example, I think it was NEE and CNP. Those two names look pretty good on the charts. And I believe NEE took off today. So this to me is just suggesting, hey, if utilities start overperforming, which we did see today, they did quite well comparatively to the S&P 500. They overperformed the S&P 500. That's more defensive posturing that takes place. So be on the lookout for some utility names because they could continue, breaking out of its little tight consolidation, which I don't have a chart of it right here. Lumber to gold ratio, another one of his strategies. If you haven't read his white paper, you can read it. But this is turning down, but it's still above zero at this particular point in time. So it's still a risk on environment according to this specific strategy that he uses. The Bitcoin to gold ratio, this is the Sailor to Shift tool. This one, I mean, it hasn't turned up yet, but we've been seeing some positive moves, at least in Bitcoin. So perhaps here soon we get a turn up. But as it stands right now, we kind of got a couple of fake outs. I've been kind of like rocked a little bit here. I haven't placed the trade yet, but I'm like, oh, it looks like it's turning up. It looks pretty good, and then all of a sudden I'm like, oh, nope, it ripped down to the downside. Still not there yet. So I just got to be patient, unfortunately. It's like I want to try to tag the bottom, but I got to just be patient on my specific trades or my specific account that I'm trading this strategy with. Now, if we break it down into a little bit smaller time frames, that was the weekly time frame. It's still on a sell signal at this particular point in time. If we look at the daily time frame, Bitcoin over S&P 500, you can see here it's starting to uptick, so it's starting to outperform the S&P 500 and trying to get back above that 50 EMA. So it did technically, it's there now. 12.42 is the relative strength line, and then the EMA is at 1240. So that's a positive development on this move up. But from another technical perspective, I mean, one, we need to have this daily candle close there to ensure it and hold above it for more than 35 seconds. But we need to get back above this 50-day moving average, and we need to make sure that this 20-day moving average, we can get back above that. This is what's the short-term trend, and you can clearly see that the short-term trend is sloping down at this particular point in time. So it looks good, right? If I were to actually just, I don't have my pen with me right now, but if I were to just draw from a line from here down to there, that would line up like a down-sloping trend, and then from here to here, that would connect quite a bit of bottoms. That kind of looks like a falling wedge. So maybe that's perhaps something from a technical perspective or trading perspective that we can potentially keep an eye on too as well. If we take a look at Ethereum's definitely outperforming the S&P 500 more than Bitcoin is. You can see it's above its 50-day EMA and is rising, and we're starting to get back above these certain key levels. And it's just in this kind of, I can't tell if this is a period of distribution or not, but it's chopping back and forth pretty aggressively in a tight range. We need to obviously hold 4,400, keep above these moving averages. This one looks to me stronger. So if we do get that buy signal, that could indicate that Ethereum might be the outperformer here on the next buy signal perhaps. And then there's also a lot of equities that I'm taking a look at that I'm going to be sharing with the Discord. And I actually plan on making a movie called my next big setup or whatever here shortly, as soon as the buy signal looks like it's going to start flipping over to a buy signal. That's all I got for you, everybody, on today's episode. So once again, just quickly to recap, look at the markets, they bounced, right? Should we be like celebrating this? Like everything, we're clear, everything's good. It could be that way, but also there's still a couple weird things that are taking place. Like I said, we have the market, pricing in a lot of volatility via the options market that we talked about on the previous episode. All right. And it's still producing, like it's still saying that there's going to be a pretty, an expected move of $77 in the S&P 500. All right. And then we're looking at these individual indicators that are showing that typically when they're this oversold, you can get these ripping rallies. But then you also, on the other side of the spectrum, this is where breakdowns occur. So it's almost as if we have the options market telling us one thing, like there's going to be volatility, and then we have our indicators and signal charts and price action telling us another thing too as well. It, to me, all lines up with this. It means to me that there's going to be an aggressive move out of this place somewhere, but unfortunately, there's not like enough ideals in one specific direction to be very confident. So it's a time to just be very cautious and not to be over trading your account, not to be overly aggressive on one particular strategy that has worked. Because the thing is, if you start pressing it, like for example, Tesla was up 5% today. The chart looks really good, and if people start to press it harder and harder, and something does take place, well, that's going to put obviously a lot of pressure on those individual traders. Just because it worked one day or worked multiple days doesn't necessarily mean that it's going to continue to work in a shift in environment. That's all I got for you, everybody. Have a wonderful night.